Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me. If you just give me a quick yes that the audio visual is good, we will kick it off. We're actually going to hop into two different books that we're going to talk about today. They're actually from the same author. If everybody could just let me know how you're doing today. Hey, Rafael, how's it going? Napoleon Fuentes Rivera. Fuentes is actually one of my favorite cigars. Minvai, good morning. Great coaching call last night, Minvai. A lot of good stuff last night. All right, so let's get right into it. We're going to talk about a big list of stocks that we're going to be watching to buy today. Let's get our coffee going today. Got a new fancy cup with a P on it. My wife bought that. She's got the big R. How's everybody doing today? Beat Jungo, welcome to the community. Welcome back again. John A., good morning. Milky Fade, good morning. Ephraim Kilfu, how do you say that? Keel Ephraim. I'll just call you Ephraim because I can't pronounce the last name. Kiflu. Good morning, Ephraim. Thanks so much for being here. Bob Burns, good morning. How's it going, buddy? Mike Brattenberg, how are you? All right, we had an amazing coaching call last night, and what I'm actually going to do today is we're going to actually talk about a couple of things. We're obviously going to dive into the sector rotation and how that gets affected today. But in the bigger picture, in the context of the sector rotation, we spent a lot of time recently about whether or not you should be trading or not. And again, we've had a lot of posted pad moments lately. Before you buy stocks, you need to understand how to make a big list. And there's something I want to talk about from last night's coaching call that I want to bring up. And it was actually, where is Minvai today? It was a question that Minvai brought up last night. There he is. That Min brought up last night that we're actually going to address right now, actually. So what I'm going to do is I'm going to pull up our email from this morning. I just want to share it with everyone, and we're going to actually break it down. So we're actually going to head right over here. I'm going to actually zoom in on the email, and I want to actually start over here. Okay, this is the part that I want to talk about. So if you're not aware of it, we have multiple coaching calls in the boot camp and in our swing trading community during the week, because becoming a successful trader, becoming a profitable trader is so much more than just learning it one time. If you do it the right way, everything builds on each other. Every stock you buy, every stock you sell, if you're smart, you learn from every opportunity, and so you can be better tomorrow. That's kind of like our mantra is to be better tomorrow than I was yesterday. So we hop back over here. I'm going to show you the key topics to what we discussed last night. And I want to kind of really change the way you think about stock trading in a way that we talked about priorities. And I'm going to go right back to that and talk about the priorities today. Let's see. Abe, good morning. And Elliot, thank you so much for being here today, Elliot. Same thing. Carlos, too. And Winnie. I love when Winnie can attend the call. All right. So we're going to hop on over here. And I want to talk about this portion here. Okay. Last night we spoke quite a bit about when to get full share size, when to trade, how to use the futures markets for an early bias to the day. All right. All of those lessons are coming into play. This is a really, really big thing. Okay. A big part of last night's coaching call centered around when to trade and how to put the pieces together. So one of the questions that we had last night was focused on, hey, Pete, if you had one thing that kind of put you over the top before you look to buy a stock, what is it? What is the one big thing? And the truth is, there really isn't one thing. It's a bunch of things that go into justifying taking risk. So again, if we have a posted pad moment today, if you're struggling right now, the posted pad moment today is you need to learn to build an argument. And it's not just one thing. It's all of the things. It's how is the market trading? How are the sectors trading? Which sector should you be focusing on? Which industry groups within those sectors should you be focusing on, and which stocks are the market leaders? So when we get into today's sector rotation conversation, you're going to see that we have breakdowns between yesterday, the last month, and the last week. And we start to focus over here over the last 5 days. That's a big part of trading. A big part of trading is really understanding how and when to get to full share size. But just as importantly, obviously, with the futures down this morning, we'll take a quick look at that as we get into it. Here's where we're looking at right now with the futures. So how do you use the futures heading into the day? How do you set up your day based on your game plan from the night before? And again, if we stick to this part here, and this is really the big thing. If you don't mind, you can absolutely screenshot this right now. I don't have a problem if you take a screenshot of it. Make those the two topics that are your main priority. So we get a question all the time. I want to kind of flip the script on the question that we got last night, which is, what's the one thing that puts you over the top to get a trade? But I really want to make sure that you focus on the two main priorities well before you even the one thing, okay? The top two priorities are the quality of the idea. That's absolutely the top one. So again, I want to put this up on the screen so you can actually take a picture of it. A big part of last night's coaching call centered around when to trade and how to put the pieces together. And actually, I think this is a big thing, because we have a lot of people who come into the community and just tell me where to get in. Just tell me where to buy. Just tell me where to get in. And quite frankly, where to get in doesn't matter if the idea is crappy. You know, where to make a left-hand turn, where to make a right-hand turn doesn't matter if you're on the wrong road or if you're heading in the right direction. So this is what we need to focus on: when to trade and how to put those pieces together. And if you go down a little bit here, answering these two questions, learning how to build an argument that would separate those struggling from those who generate reliable profits. So I want to question now. I want to ask you, you don't have to type in an answer, but I want to challenge you. I want to challenge you and ask you, how deep are you going into your game planning when you decide to buy stocks? How detailed is your trading plan? How detailed is, you need to know exactly what is going to happen prior to putting on that trade. So I want to go down to the last part of the what actually happened in our coaching call last night, which was this question here from Finviz, who's actually on the call here tonight. All right. Clues that show you're getting better, even if your P&L. Now, he was asking the question in the context of, how do I know when I'm improving, right? What are the milestones that I should say, okay, if that happens, I feel good about it. And I'm going to give you an answer that you're not going to expect, but it's 100% absolutely the truth, okay? As you're building out your trading experience and you're kind of building and building and building, and you're like, oh, wow, I'm not going to do that anymore, that kind of stuff. Or if you don't pay attention, you keep doing the same thing over and over again, which is not what you want to do unless it's working. The clue, the single biggest clue that it'll make you feel awesome about being a stock trader and learning how to be a stock trader, and it applies to today. So I'm going to make this very, very clear, okay? And I'm going to, just to give you some context of what I'm talking about, and that it applies today, okay? So this is the market that we're looking at right now, all right? So how do you know when you're making progress, especially as a new stock trader? And this is something you want to write down. John O'Connor, good morning, pal. What is the number one thing? When you wake up one day, you do all of your game planning and you can't find anything you like. Why is that such a big deal? Why is not finding something to trade a big deal? Because number one, it means that you know what you're looking for. And if you know what you're looking for, number two means you have a strategy. And a strategy means you have an edge. An edge means if this is happening or if this is unfolding, only then should I start to build an argument for an idea. So the first thing you do is look at the big list of ideas. Again, take the raw scans that you do. So I want you to write this down because it's that important. When you could look at the market and say, I don't see anything I like, that's when you know you are turning the corner, because you have an edge, you believe in the edge, and you're only waiting to trade that edge. It is so important. I can't explain the difference to you. And I'll go back to you what I mean by that for last week. Last week, we built a trading plan of when to trade around the FOMC announcement. We knew that Monday and Tuesday were going to be a little tough. We had 2 weeks of selling going into Monday and Tuesday, but we were very clear that we said that we thought the price was already, the bad news or the tapering conversation was already what we called baked into the price action. So, and I'm going to go back to the email again. So we had this conversation here, okay? Spotting when to trade or when to wait, okay? Now, what does that mean? That means that all in our community every single day, especially for that 2-week period, but on top of that Monday and Tuesday, be patient, don't dig yourself a hole, don't dig yourself a hole. So I was giving my experience to the community that in my past, I would overtrade or trade just because the market was open and trade too much. And then the market would unfold exactly the way that we expected. And I, dare I say this in context. Everybody, please take this in context. When it's obvious, it's easy to make money. Okay. And I think everybody on this call can agree with that. And Mike S., I absolutely agree with that. Okay. Knowing when. So what does that mean? How does that translate? That means that Thursday and Friday did exactly what we expected, and we traded aggressively. The market internals look good. The sector ETFs look good. We saw a rotation that was obvious. We held a little bit longer. And there's three ways to make more money. Hold a little bit longer, get a little bit more share size, and obviously spread that out to more positions so that you can give the market more time to give you feedback. Which brings us to the next part of the email from our, actually, these are all topics that we discussed in last night's coaching call, which is this one. Okay, the profit maximizer. We have a very unique way of managing profitable trades. So once you get to the point where you understand that risk reward is a part of the idea, okay, everybody, even in the greatest trading strategy in the world, it's assuming that you have an edge and some trades aren't going to work out. As long as we accept that first before we start trading, get to the point where we keep losses small, the next step is understanding how to manage and hold your winners longer. Understanding and having a structure so it's actually stress-free to manage your winning trades. Now, raise your hand if it's the last time you could say, wow, managing that winning trade was really stress-free. For most people, it's not stress-free because we could see a stop loss when a trade moves against us, but it can be challenging to understand how to manage something that doesn't have that same level. So the beginning part of every trade that we put out, we always have an initial profit target. That's the profit target that justifies the argument for taking the trade in the first place. And it's not that complicated, but you need to have a target. But then what happens when your profit target gets hit and it starts to move up and travel and travel and travel and travel? And I'll give you an example. We actually have a news story here today for BlackRock, right? So they're dipping their toes back into the China market. That's super interesting, right? But we'll talk about a stock that was, we're going to use BX as an example, where the stock rallied and did not have a target because you could see it actually just took off and was now trading at all-time highs. So the obvious question comes in that we have all the time is, how do I manage profits, not only regular profits, but when we're off the charts, we're literally off the charts and heading into new all-time highs. How do we make enough on our winning trades when we're in uncharted territory? And how do we make enough on winning trades to maximize those profits so that the losses are nothing more than little annoying business expenses, and then we focus mostly on managing those winners? So you need to have a strategy, but I think we've talked about this a little bit in the past, where there's two types of market conditions. So again, if we go back to the email and we pull this up, because this is a really important part of the conversation today, okay? Spotting an argument, building an argument, and the one thing that matters, but spotting when to trade or wait, okay? So two very different things. Spotting when to trade or when we should be doing nothing, but when to trade actually brings up a different question for stock traders as well. Okay, I understand that I want to trade right now, but how great is the argument? If we go back to a bunch of ideas that we had from yesterday, I'm specifically going to use American Express as an example. So if we take a look at the chart of American Express from yesterday, there was no question about whether or not American Express was a buying opportunity yesterday, okay? But we mentioned that it was a day trade for us because of the follow through that it just had. And then you look to the left and see what the stock normally does in a bullish move. American Express was definitely a buying opportunity yesterday, but it was not setting up as a swing trade. So when we take the idea of, should I be buying today? And the answer comes back, yes. The second part of the question, and I'm going to leave this up on the screen so it becomes obvious. The second part of the question is, what type of trade should I have right now? Should it be a day trade or a swing trade? And if you're on the call right now and you're only a swing trade, if it's a swing trade, is it worth it? Am I looking at a trade in a stock that rallied almost $20 in just about a week, which is the largest move the stock has had in a long time? So what are the odds of follow through for what I need to risk on a swing trade to make enough money to justify taking that risk? So I'm actually going to give you, we're going to talk about a couple of books here. I'm going to put these up here You can probably see them right there. Marcel Link is the name of the author. High Probability Trading and Trading Without Gambling. Maybe I could do it a little bit of an easier way. That's the name of the book. That's the first one. And the second one here is, let me pull up that one for you too. Trading Without Gambling. Okay. Now, this is a book by somebody who was a professional trader and eventually opened up a futures trading brokerage in New York. Now, I don't know if you can see it on here, but I have notes in here from, actually, you can see it right there, 2003. I have notes on this book from 2003. It's actually so beat up, it's actually falling apart. So what's the point of that? Why am I mentioning that in the context of what we're looking at in the market, and how does that translate into potentially talking about some ideas today? I'm going to ask you a question right now, and you can type in yes or no, or you don't have to. That's okay. But do you wake up every morning expecting to make money? Not do you hope to make money? Do you wake up every day when the stock market opens and you have your game plan? Do you expect to make money every day? If the answer comes back yes, you're doing what it teaches in this book and what we talk about in our boot camp, which is essentially building arguments for high probability ideas. If you're not at that stage yet where you're just hoping the stock market gives you money, then you need to understand what probability is versus just being okay to accept risk. And this is a big part of trading. A lot of traders don't factor in what are the odds of reaching my profit target. And a lot of traders also don't factor in the fact that there's risk on a trade. And I'm gonna challenge you right now, because I virtually guarantee you this is you, because it was me at one point in my career. How many times has a stock moved against you, got close to your stop loss, and you moved it just a little bit because you didn't want to get stopped out? Goes down a little bit more, and then you move it again just a little bit. Raise your hand or type in yes or say that's me when a stop goes down to your stop loss and you move it. Now, I've done it. I don't do it anymore because it's just silly when you understand that losses are nothing more than, okay, that idea gave me some feedback. But here's the thing, and this is $1 million lesson. When you get to the point where you're moving your stop loss, that means that before you put the trade on, you never expected to have a loss on the trade. You hoped it didn't move against you. And then when it got to that point, you froze and moved a little bit more because you want to be right versus you want to be profitable. So I'm going to tell you right now, a huge part of being profitable is understanding that losses, quite frankly, they're okay. We're paying for information in the market to determine, does the order flow get follow through? And was that the right entry point? Sometimes you get feedback that rockets right in your direction. Sometimes you get feedback where it's like, no, not yet. Okay, I paid $100 for that information. The stock is not ready to go yet, so I'll take that information, put it in my pocket, and get ready to use that for the next trade. So we get back to all of those topics that we just mentioned before from last night's coaching call and what you can see here on the call. I want to get back to this, right? We had the question last night. Actually, let me make that a little bit bigger so you can see it. This question right here. What's the one thing that matters? Okay, what is the one thing that matters? So I want you to leave today and really think, get your legal pad out, start writing stuff down. Ask yourself, what goes into my argument for building a trade? How many different things can I put into my argument for whether or not I should be accepting risk? And again, that goes back to the fact that you need to accept risk before the trade, because you could build the greatest argument in the world and the trade still might move against you. As long as it moves against you and you're like, okay, that trade didn't work out, it didn't follow through, which, by the way, that's big language. Don't say winner or loser. Say follow through. I put that trade on, didn't follow through, I got out of it. Oh, that trade did follow through. Now I'm looking for a spot to add to it. You start to say right or wrong, and that your ego ends up having a monster grip on the trade. You don't want that. You want to actually just be see the trade, put it on, see the trade, put it on, see the trade, put it on. So what I'm bringing together here for you today is I really want you, because the market's down today, because this is really a big part of the equation. Because the market's down today, we're going to have another wild and wacky day in the markets today where it's not just going to be, oh, the market opens and we float straight to the upside. You really need to understand when is the right time to take risk, because the odds of making money are strong. Just because the market opened is not a good enough reason to take risk. You have to take risk, accept risk, because you built an argument that there's a really good chance that stock's going to go up after you bought it and hit your target. I can't stress this enough. Once you get to the point where you understand a lot of the questions that we ask and cover on our coaching calls at night, everything changes for you, because now the entire job of trading is learning to read order flow, learning to read the tape, putting those pieces together, and that will tell you when to trade, if you should trade. Okay? I challenge you now. I hope that you watch this video more than once. And by the way, we also have a lot more videos below here in the description if you want to keep taking these lessons further and further. All right? Oh, by the way, if you get value out of these, do me a favor, hit that like button and subscribe. That would mean everything to me that I'm helping you out. Okay, so we're going to actually work our way over now into the sector rotation for the day, and we're going to talk about some ideas for the day. So as you know, if you've been a regular viewer of Stocks for Breakfast, we've been hammering away at the energy stocks, and now you can see where they've been for the better part of the last 2 months, actually. We started talking about them yesterday in a way where they started to end the bearish order flow, start to go sideways, start to break out, and we started to point out some individual stocks and financials have actually started to perk up as well. Now, the financials on the bullish side are a little bit overbought or sitting at all-time highs. We're actually going to show you Morgan Stanley, which we have a buy alert, not a buy stop. We have an alert up at 106. That's the area that we're going to be watching for Morgan Stanley as it just kind of rests right in front of 106. We also saw that Morgan Stanley, ironically, downgraded Wells Fargo. So keep an eye on Wells Fargo WFC and see how that ends up reacting today. So what I want to do now is I want to go through the list of ideas in the top 2 sectors today and give you some ammunition to go into the day and say, okay, at least I have the idea of which stocks I'm going to be watching today. I'm going to focus right now on energy and financial stocks. And remember, what we're covering here is the part of building the argument. It starts out with the market, goes up to the sectors, which is what we're looking at on the screen right now. And then it goes from the sectors into the individual stocks. And then you pick which stocks still have room to go. So that's the last part I want to leave you with here before we start getting into the stocks, which is just because a stock meets scan criteria, that's not enough information to know that it's a trade. You have to go from your strategy to scanning for stocks that match your strategy. Then you have to see which stocks are valid trades right now, which means, do they have justifiable risk and do they have profit potential so that taking that risk is worth it to you? So I'm going to actually go over a whole bunch of good ideas right now. We're going to break down the energy stocks and the financial stocks just to give you some short-term ideas. So we're going to focus here and we're going to focus here. So let me actually just pull that up. Got my screen here. And then we're going to go here. Oh, by the way, Ford had some big news yesterday. If you remember, we actually mentioned Ford yesterday. When we drew the trend in Ford, we actually had the breakout. This is how we work all the charts. So Ford actually broke this downtrend, went into this box in the last couple of days, actually had a nice bounce out of that. Okay. So we're going to focus, as we said, first on energy stocks. And I'm going to give you a list. Now, everybody needs to make their own financial decisions, but I'm going to walk you through some of the ones that we've been talking about in our own community. CPE has been in the list for a while. MTDR. So I'm showing you the best of the best. Now we're going to take a quick look at these two. Remember what I just said about profit potential versus whether or not it's in the list as an idea. So you can clearly see here, I'm actually going to come over on the side of the screen here. You can clearly see that CPE has room to go. MTDR matches the criteria, but how much room does this stock to go and how far is it normally moved? If you had a choice between CPE and MTDR right now, which of those two would you have taken? Or which ones would you take heading into the day? All right. We're also going to take a look at, keeping with the list of stocks in this industry, FANG. FANG has actually been really strong over the last few days. So again, downtrend into potential change of trend into a new trend. So now you need to make that decision of which of these stocks are still at the beginning of their move and which stocks have room to go. So you can see Hess here broke this level and bullish gap right up into the next level, and it's up again. Around 86 would be the next level in Hess. ConocoPhillips on the breakout. So we're looking at the best of the best. Now you looked at the left in ConocoPhillips, and we're actually at a big level here. So you got to look at multiple time frames. That's going back to 2019. So you can see the resistance level here now. So great 5 days of trading, but now it's traded into an area where selling has come in the last 2 or 3 times. So is the breakout in COP a great idea today? Probably not. Probably not. CLR. So now it's separating great ideas that meet the scanning criteria into ideas that are trades right now. So working our way down the list, again, we're looking at the best of the best in the strongest stocks. EOG has been very strong, and it's got room up to around 88. Working our way over into LNG. LNG reversed yesterday, broke out into new highs. Now, if you look to the left, what's the biggest move that LNG has made in the last year? Going all the way back. The move that it's in right now is probably the biggest move. So if you put on a new swing trade after this rally of $14, how much risk do you have to take in order to hit a profit target that makes it worth it? It's probably a little bit late in the move here for LNG. We're going to finish up with PXD, which also meets the criteria. Is this strong the last couple of days? 100%. Is it in the right sector? 100%. Is it a great trade idea today? You know what? I'm not so sure. It's got to get above this level and stay there. And right now it's sitting at a spot right around 170 where the sellers smashed it. Sellers smashed it, couldn't get through, and it's right there again. So for me personally, I love this idea, but I want to see it punch through 170, pause for a couple of days, and then take out. Because if you remember, the parts of the trade are, is it a good idea, and is it a good idea now? That's not the same thing, and that's where a lot of traders struggle getting to the next level when they buy stocks. They just pull it up in a scan and say, I want to buy it because it was up 12% yesterday, or whatever the number was. You have to answer both of those questions. Is it a good stock to buy? Is it a good stock to buy now? That second question is imperative that you ask yourself. And the way to answer that question is, what are the odds of my profit target hit versus my stop loss, which means, am I taking a trade now based on what the stock normally does? And look, let's face it, just look to the left and say, what does the stock normally do when it has a bullish rally? If it normally goes $12 and it just went 13 and it's hitting resistance where sellers smack that thing down the last 4 or 5 times, that's the right side, but it's not the right time. So do you start to see how you start to wake up, use your own experience? You avoid these trades that are at best 1-to-1 risk-reward ratios. You stay away from them. You wait for better ideas, and you go and look to find ideas that are better ideas now. So now we're going to shift over into some of the financial stocks, and we're going to take a look at the leaders in that area right now. So we're not going to look at any ETFs. We're just going to look at stocks that are potentially breaking out. Now, this is interesting because this stock actually meets the criteria, but is it a stock now? It meets all the criteria of volume, volatility, but we can look to the left here and see, okay, the last 3 times that it got up to this $20 level, it got smacked down. So above 20. And again, this is something that we talk about quite a bit. There's a difference between your trading game plan and your tracking journal. Okay, this is a big deal. We post this in our community every single day about this idea is valid now. This idea, you need to set an alert. Big difference between buy stops to get in at that price versus an alert that when it gets up to that price. So right now, we have an alert in Morgan Stanley. This stock here, CARV, we'd have an alert at just above 20. You can see Morgan Stanley up at the all-time highs, open up a little bit lower, but 106 and change is where our alert is. So we have an alert in Morgan Stanley, not a buy stop yet. Working our way over into some more of the financial stocks that have been the leaders. UPST is getting hammered this morning with a lot of the market, but is it a good idea? This is the question right now. Is UPS, let me actually leave that on the screen. Is it a bullish stock that has high odds of following through when buyers are there? 100%. So how are we looking at this stock right now from a perspective of where, if you look in the bottom right-hand corner, the stock is actually getting hammered this morning. So how does that translate into an idea? Well, strong stock with a weak close, probably going to push lower on the open. Now I'm going to go into the day scripting out what I want to see. Would this be full share size? No, because the most recent momentum is no longer in play today. So if I'm looking to trade UPST, which is one of the stronger stocks in the second strongest sector, because of today's open, I'm going to look for entries and build my initial position, as opposed to what I might have done a week ago, where I could have been a little bit more aggressive because the current momentum match the current order flow. That's how you start to build an argument, because now we're adding position size onto the trade itself. Okay. All right. So, okay. Awesome, Kelly. That's awesome. I'm glad that's helping. That's what I want to do. That's the whole point of what we want to accomplish on these calls. All right. So we're going to get into a couple of more. We just gave the rundown and the thought process of UPST. We've been mentioning American Express. And again, if you go to the left and look at the biggest moves that American Express has made, this is probably one of the biggest moves in a while. And if you zoom out further, you can actually see that the stock is now approaching all-time highs, which is pretty amazing. Now you have to ask yourself, if this was the breakout level, this 174 level, it traded up to 178. Yesterday traded into what a lot of people know as a topping tail. I love the idea. For me personally, in American Express, I'd love for this buying to be absorbed, pause above this breakout level for maybe a day, meaning today, and then look for a new entry, because then we pushed, we paused, and then we're looking for another push like this. So I might day trade it today if it gives me bullish signals, but I won't be looking to initiate a new swing trade yet. JP Morgan, we just talked about before. Again, JP Morgan, awesome push up into resistance. So the last time it got up to this level, sellers came in hard in May or June. Now, here's the question. If we look to buy JP Morgan as a swing trade today, not as a day trade, as a swing trade, what are the odds of this stock following through in the same direction over the next 5 days to justify taking risk today? Well, you have to ask yourself, how often does JP Morgan run $16 to $18 in a short period of time? And what happens after that? Well, the odds are it's going to pause for a couple of days. So that would make JP Morgan a pretty good idea, but not a pretty good idea right now. So in this case here, we're just going to wait for the stock to pause, because we don't want to take a trade that's one-to-one. And be honest with you, I'm going to give you another quote that somebody gave me probably around 10 years ago. If you take break-even trades, that makes you a break-even trader. And that kind of hurts. Like, it hits you right here, and you're like, yeah, I never thought of it that way. So you have to start thinking, like we just talked about in this JP Morgan trade, is this trade greater than a one-to-one risk reward today? It's not a question of whether or not the stock is bullish. It's a question of, can you put on a trade today as a swing trade that is greater than one-to-one? That's the question. And that's the million-dollar question that once you get better at answering by putting all of those pieces into the argument, you avoid trades that are one-to-one, and you aggressively, and when I say aggressively, meaning you don't hesitate when the odds are stacked in your favor, and you have room to go, and you understand when to get to full position size. All right, these videos they're pretty, we get into some pretty good stuff here. We actually need to watch these videos more than once. Okay, so now we're going to talk. We're going to keep going down the list here of stocks that meet the financial criteria. Lending Club, actually now it's actually, classic technical analysis. We're actually forming a head and shoulders top here. Here's the shoulder, here's the head, here's the top. So while it's still long-term bullish, now you have two different ideas here. The fact that it traded strong yesterday, I like that. The fact that we retraced 100% of this previous rally, I don't like. So it's absolutely bullish. The weekly chart is also bullish, right? The weekly chart went from bearish into bullish U-turn into inside week, which is only 1 day trading. So if I'm going to be looking to buy this stock, because of the size of this deeper pullback, I still like the long, I still like the buy, but I'm not going to trade full share size on my initial entry. My initial entry would be a piece here, and I wouldn't do anything until it clears this level where sellers came in and pushed it down over the last couple of weeks. So I like the idea. There's room to go, and there's room to work the idea. Okay, we just talked about Morgan Stanley. Now, what's interesting is stocks that meet the criteria. MasterCard. Is MasterCard in bullish or bearish order flow? So we could actually talk about MasterCard, and we could talk about Visa in the same conversation. How obvious is the buying pressure in these two stocks? Well, this is really where the question comes in in a big way. And I'm actually going to finish up on this. You can clearly see here the MasterCard and Visa have bearish order flow going back for a couple of months. The last couple of days, we broke that downtrend line of the bearish order flow, and we have a nice 5-day rally last week. Yesterday traded into a bearish U-turn. Traded above yesterday, rolled over, came back, and closed near the lows. So it closed red and closed back inside of yesterday's price action. That's a lot, right? That's what it takes to be successful, noticing these things on individual candlesticks. So let's think about setting up an idea in our mind and the odds of follow through And should we take risk as a buyer in Visa? And if we do, what kind of position size do we want? If we want 1,000 shares, does that chart say get 1,000 shares? Yes or no? No. If that's the most we want, we don't want to start out with full position size because the bearish order flow is still the dominant trend. We have 3 months of bearish order flow and 4 days of bullish order flow. Who's winning that fight right now in the long term? Let's say the last few months. Right now, bearish order flow is the dominant force. Bullish order flow is just starting. So what we left you on this last week is critical because we talked about this last week. When you're looking at charts, when you're doing technical analysis, when you're learning to read the order flow, when you're learning to read the tape, you want to start to say, how long has the smart money been in this stock? How long has the smart money started to step up and start building a position in this stock? Is it the last 4 days, or is it the last 4 weeks, or is it the last 4 months? In this case here, both MasterCard and Visa, which are in the strong financial sector, it's 4 days. So if the smart money has just started buying the stock for 4 days, or has the smart money started short covering, which means they have to buy the stock to get out of it, if that's what's going on, if they are just starting to buy the stock, how does that translate into position management for you? You see how these pieces come together? It's kind of cool because you look to the left, you're like, I don't know who's doing it, but all I know is that they're just starting to buy MasterCard and Visa. So you know what? If I decide that I want to start to build a position and look to trade this back up to the level that it was previously, and let's just say for argument's sake, up there is the target, which is around 251. So now you have roughly a $20 profit target. So a $20 profit target the first time it rolled over, you now need to know, okay, first time they're starting to reverse this stock. So that's the first time they're buying. So I'm going to start initially putting the trade on with a smaller piece and build up to that 250 target in the same way that now I'm looking for them to push and pause, push and pause. And the more that we see the smart money doing that, the better arguments we build because now we're learning how to read the order flow, read the tape, determine if there's an idea, and then determine how we want to enter that idea from a position sizing perspective. It's pretty cool when you put the pieces together, and this is the whole point of why we get all jazzed up about doing these. So you start out with the market. We went into the hot sectors today. We broke it down into the individual stocks, and then we broke it down into whether or not which stocks were good ideas. And this is kind of a awesome one to finish up on because it meets the criteria, but how is it a valid trade? And that's really where trading becomes really fun because now you're like, if this, and if this, and if this, and if this, that means this. So in this case here, like, all right, they just started, so I'm just going to start instead of being inexperienced and just say, I'm going in with all 1,000 shares. I can't wait to get Visa when there's no reason to do that yet. And we established the profit target, the initial target up in that 252 area. All right. So we just went through the whole trade. All right. All right, everybody. I have to actually call it a meeting because we have to head over to our boot camp game plan meeting, which starts in a little bit. So have an awesome, awesome day, everybody. Thank you so much for being here with me. Please do me a favor. Smash that like button. It would mean everything to me. It lets me know that you like this content. And also make sure you subscribe if you haven't done it already. All right. If you want to learn about the boot camp and you want to join the calls, click down. There's a lot of videos below here as well, and you can find out about it as well. Have an awesome day, everybody. I really appreciate you joining me today. Thank you so much.